There are presently 18,000 autos backlogged in the U.S. Just in the last trading hour, Tesla's shares increased by 2%. To change course, there are almost 13,000 cars behind schedule in China. Tesla's stock has risen sharply over the last month due to news of the company's shift to a recurring revenue model. The market capitalization has increased by $300 billion as a result of this change in corporate strategy. The waiting time for a Tesla is the lowest it has been in years, and the company is presently giving incentives like 3 years of free supercharging. Because of this, Tesla is now a very sought-after product. Some have interpreted the stock's sharp increase as a sign of market overconfidence, but opinions have been divided on the matter. With the tremendous spike in Tesla's stock price over the last 10 days, many bears are panicking. Notably, Dan is still having trouble keeping up with the stock's explosive growth, while Tim, who was formerly a fervent opponent of Tesla, has reversed his opinion. We'll then turn our attention to Tesla's energy business, an industry that is finally getting the attention it merits. We'll look at Morgan Stanley's most recent energy model, which indicates that Tesla Energy's worth may exceed that of the automotive sector. With breakthroughs like the MEAP pack and notable rises in energy storage installations, Tesla Energy is well positioned to defy conventional market assumptions. A recent CNBC clip showcased Tesla's remarkable 10-day stock rise. Melissa Lee frequently expresses more through her facial expressions than through words, particularly in response to Tim and Dan's remarks. Tim, who formerly held strong opinions about Tesla and even foresaw its demise, has drastically changed his mind after his quick wagers failed. Conversely, Dan Nathan of Risk Reversal Advisors appears to be adversely affected whenever Tesla's stock rises, maybe as a result of losing money on shorting the stock. Notable are Melissa Lee's responses to Dan's pranks, which may suggest that she finds his pain amusing. The debate around Tesla's thrilling stock run begs the question of when robotaxis should be implemented. Tesla's stock was trading at $138 a few months ago, is currently trading at $262. Investors were worried about car delivery at the time, but their worries were misguided. Because of the cyclical nature of the automobile sector, recent disruptions to the supply chain and shortages of vehicles have created market instability. These transient swings don't seem to faze long-term investors. Due to facilities that weren't ready for NVIDIA GPUs, Elon Musk made the strategically sound choice to direct resources to tsla rather than Tesla in order to protect Tesla's balance sheet. Tesla had a good plan in place, despite a few bad spins. The H100 NVIDIA chips are essential for creating a network of robotaxis, but in order for them to function, they need completely furnished spaces. If Dan had more objectivity, he would understand that delaying the receipt of these GPUs was a wise decision. The market has been unbalanced, catching bears off guard. Short sellers invested excessively in Tesla. Recent deliveries from the company have surpassed expectations, and its previously unnoticed battery storage sector has experienced a 100% growth. Finally receiving notice, this energy storage boom is enhancing Tesla's standing in the industry. Unverified rumors suggest that some short sellers of Tesla may take pleasure in the financial upheaval that results from betting against the stock. Either way, it's evident that wagering against Tesla frequently backfires. Although there is clearly room for the stock to rise further, it is now in an overextended stage. Some investors advise selling now in the hopes of waiting for a downturn and searching for a better re-entry moment later. Nevertheless, this tactic entails paying capital gains taxes and depending on the stock declining sufficiently to support the sell. The stakes are enormous with autonomy approaching. Should autonomous taxis become a reality, Tesla's value may soar. Considering the possible gains, it might not be a good idea to sell now. As more people become aware of Tesla's energy storage business's potential, the story surrounding the company is starting to change. Elon Musk has always held the belief that Tesla Energy had the potential to surpass the car sector in size. Wall Street is beginning to realize this, as evidenced by Morgan Stanley's observation of Tesla's energy business's substantial value. Energy consumption is rising across several generations due to the growing need for generative AI, and more interest has been sparked by Tesla's Q2 energy storage performance. Tesla is ready to operate at a scale demonstrated by its mega factory in Lathrop, California, which can produce 10,000 megapacks a year. The enormous profitability of the energy industry is demonstrated by the fact that the profit from a fully operational megafactory is equal to the profit from the sale of 1 million Tesla vehicles. The story around Tesla is changing as Wall Street recognizes these facts. Tesla is becoming acknowledged as a significant participant in the energy market and is no longer just a car maker. It has the ability to upend established energy industries. The company is well positioned to benefit from the growing demand for energy solutions around the world thanks to its innovative approach, large size, and strategic focus on energy storage. The potential for robo-taxis is similar to the increasing interest in Tesla's energy company. Significant financial gains could result from a quicker and more extensive rollout of Tesla's driverless cars. As a result of a fresh perspective on Tesla's potential, Morgan Stanley has revised upward its energy expectations while decreasing its automobile estimates. It's crucial to remember that analysts talk about new car sales when they talk about market penetration, not the total number of vehicles on the road. There are rumors that Morgan Stanley is adjusting their predictions to avoid criticism and maybe downplaying their energy projections in order to avoid establishing an unattainable price goal for Tesla. Nevertheless, because of notable quarterly results and advances in AI, investor interest in Tesla's energy sector has increased. The $310 price estimate for Tesla has not moved despite updates to analysts' energy model. Their price projection remains constant in spite of changes to their energy and automotive predictions, which begs questions about their methodology. Tesla's energy division is now valued at $50 per share, as opposed to $36 earlier. Rising China protectionism and the comeback of hybrid vehicles are blamed for the U.S. battery electric vehicle penetration rate, which fell from 25% to 20%. As a result, their fundamental valuation has decreased by $15 per share to 5.7 million Tesla auto sales in 2030 from their original estimate of 6 million. A decrease in solar deployments but an increase in storage has been observed by Tesla Energy, which is largely a pure energy storage company. Currently accounting for 95% of Tesla's energy revenue, the energy storage sector is predicted to grow to 97% in the future. Elon Musk claims that Tesla Energy is their highest margin business, and this segment's margin profile is far greater than the car industry's. In comparison, the price of a single Megapack 2 XL is $1.4 million, which is the same as the money made from selling 35 Tesla vehicles, but at a far larger profit margin. According to Morgan Stanley, the earnings from selling 1 million Teslas is equal to the profit from one fully operational megafactory in Lathrop, California, which has the capacity to produce 10,000 megapacks annually. Investors are starting to think that Tesla Energy might be worth more than Tesla's automobile segment as a result of this change in viewpoint. The clean tech analyst at Morgan Stanley claims that Tesla's rising brand loyalty, innovation, and size present a serious challenge to the market's established participants. Tesla has also recently turned its attention back to the energy sector. When comparing Megapack sales to car sales, energy storage is 3 times more profitable because a Megapack's operating margin is roughly 20% higher than a vehicle's, which is around 7%. The 2025 storage deployment estimate was raised from 25 GWh to about 40 GWh as part of the modifications to Tesla's energy valuation. It is predicted that Tesla Energy would reach 100 GWh in storage deployments by 2028, 3 years ahead of schedule. This change is a result of Tesla's dominant market position and the growing need for energy storage on a worldwide scale. It is anticipated that Tesla will account for 30% of the worldwide stationary storage market by 2030, with a valuation of $183 billion for the energy division, up from $131 billion. It's interesting to note that Morgan Stanley's energy storage deployment expectations for Tesla, which were previously published and are currently being updated, indicate a considerable rise of 50% in their 2030 estimations. Comparable increases for Tesla's projected vehicle delivery times are probably not far behind. Even though Elon Musk's high-minded projections frequently cause analysts to reassess their estimates, Tesla is still expected to create and sell 20 million cars by 2030. Bears are reeling from the recent spike in Tesla's shares. Dan is facing the consequences of shorting Tesla, while Tim, who was formerly a fervent opponent, has softened his position. It's taking a while for the company's remarkable progress in battery storage to receive the recognition it deserves. With much attention and investment in this industry, it is becoming increasingly clear that Tesla Energy has the potential to outperform the automobile segment in terms of value. With Wall Street catching up to Tesla's vision, the company's future appears increasingly bright. How do you feel about the most recent spike in Tesla stock? Do you think the value of Tesla Energy may eclipse that of the car division? Tell us in the comments section below. For more updates on Tesla and other insights, please like and subscribe to Tesla Stock News if you liked this video. We'd appreciate your time, and we'll see you in our upcoming films.